JP Morgan has just came out and said that the biggest risk to the market is no recession at all. We're going to hop straight into it. Take a look at this. Trend Watcher Guru just in. JP Morgan says the biggest risk to the market is no recession at all. Let's dive a little deeper. What do they say? Okay. Markets Insider reported JP Morgan strategist Mike Bell stated the biggest risk to the market in 2023 is if there's no recession at all. As the economy is feared a recessionary state in the U.S., the actions of the Federal Reserve could negatively impact how the economy reacts. Bell has stated that without a recession, current wage growth could force the Fed to raise rates more than expected. The action would be an attempt to combat inflation, which would lead both stocks and bonds to decline without rates. So I kind of get where he's getting at here. So if the Fed knows we're going to head south into a deep, real recession, then they can't raise the rates as high. And they're going to eventually have to come back and pull down rates and cut rates. But if we don't end up in a recession, then the Fed's going to say, hey, we're just going to keep raising rates, which is obviously going to fuck the markets. And that's what, I kind of get what he's saying here. And take a look at some more quotes. As he says here, basically says, instead, the Fed would have to resume rate hikes in the second half of the year. Now, what's being predicted is that the Fed is going to raise a couple more times, and then they're going to stop. So they're going to raise a couple more times at the beginning of 2023 this year, and then they're going to stop, and then 2024, they're probably going to pull down rates. That's if everything goes to plan. Now, it's really interesting because I personally believe if we continue to raise rates, we're going to have to enter a real recession. So I really do get what he's saying here, and yeah, it could be kind of bad because if the Fed just continues to raise rates to fight inflation and nothing gets fucked, then they're just going to continue to raise rates, but that's not going to happen because that's just not really how it works. It's going to be interesting, though. The Fed is trying to perform a soft landing, so it's going to be interesting to see what they do. And to our next story, take a look at this. Demand for gold surged to its highest in more than a decade in 2022, fueled by colossal central bank purchases that underscored the safe haven's asset appeal during times of geopolitical upheaval. #gold. Now let's dive deeper into this. Demand for gold surges. Okay, annual gold demand increased 18% last year to 4,741 tons, the largest amount since 2011, driven by a 55-year high in central bank purchases, according to the World Gold Council. Now we know Russia and China have been betting big on gold, and this is very interesting because we know gold is hard money. Gold has been around for thousands and thousands and thousands of years. So what are they trying to plan? Are they trying to get their fiat currency backed by gold? Are they scared that their own fiat currency is going downhill and that's why they're buying gold? There's a lot of, questions to be asked here. And as it says here, central banks hovered up gold at a historic rate in the second half of the year, a move many analysts attribute to a desire to diversify reserves away from the dollar after the U.S. froze Russia's reserves. So we know when Russia invaded Ukraine, U.S. fucked all of Russia's reserves, completely froze them, denominating the currency as part of its sanction against Moscow. Retail investors also piled into the yellow metal in a bid to protect themselves from high inflation. And then central bank purchases of gold hit 417 tons in the final 3 months of the year, roughly 12 times higher than the same quarter a year ago. It took the annual total to more than double the previous year at 1,136 tons. Really interesting stuff going on. And as we can see, take a look at this chart showing gold regained shine in the last 3 months. Gold will always be around. And now let's take a look at the price of Bitcoin. Bitcoin is sitting around 23K right now. We have not been moving for the past couple of days. The stock market is open today because it is Tuesday. Stock market's still treading around. It's going to be interesting to see. I think Bitcoin's probably going to cool around this range for a little bit longer, and then I'm feeling it's going to make another move up. I'm feeling we're going to make it. I don't know. Maybe we do, maybe we don't, but it obviously is kind of macro-driven and the dollar, of course, has been plummeting too. So the dollar plummeting is allowing a lot of liquidity to spread elsewhere. As you know, in this rally up, the dollar was sucking up a ton of liquidity. And to our next story, take a look at this. Just in, German bank Deca Bank to offer Bitcoin and crypto to over 1.5 million clients. W adoption. Let's go. And take a look at this. To our next story. Eurozone Q4 GDP rises by 0.1%. Europe is not in, a good place right now. I think we all know this, but this is bullish. So glad to, maybe not bullish for the markets, but it's good to see that their GDP has risen. And take a look at this. To our next story. Judge rules the identities of the 2 people who helped secure SBF's $250 million bail, and they can't be made public. It's going to be really interesting to see who secured these bails, but Yeah, probably Gary Gensler. Take a look at this meme. Absolute clown world. Into our next story, take a look at this. Sam Bankman-Fried's Alameda Research sues bankrupt crypto lender Voyager Digital for $445 million. This Sam story keeps going on and on and on and on. Absolutely ridiculous. And yeah, guys, that's all we got for today. Make sure to like the video, subscribe, leave a comment, and go follow me on Twitter. Go follow me on all my socials. And yeah, thank you for watching.